The other one I wanted to show was CI. And this is one I found this live while we were talking in the pit. And to point that out, Ryan and I go live every morning. Ryan's in from 9 to 10. I'm in 10 to 11, talking live in the market. While Ryan's not talking, I'm looking for trades. So when we get to 10 o'clock, we usually have a pretty good list and some scans to work off of. We found this Cigna trade, and it went in after 11 because that's when I guess it was around 11:30 or so. But the down level was the 282.15, which I'll zoom this in so you can see. It was this level here. What did I use? I used the low of the day. And while we were talking about it, it was actually back into here was the original low we were probably going to use. And I'll be honest, we got busy. Used this as our low, and it traded down as low as 279.82 versus 282.15. So that's about $2. But when you look at those levels we talked about, our first down level was 279.33. So we got almost right down to that first target level. Again, the low is 279.66. And as Ryan pointed out, if you're getting towards that level and then you see it starting to reverse, first thought is, I may want to make a move here, right? I've got some profits. Pete talked about it. Ryan talked about it. This thing probably, did trade, probably cost you $2.50 or so to get in. But regardless of what it cost you, if it moves $2 and it's a 50 delta, it's going to theoretically increase by about $1, right? Ryan had touched on it. These are not all home run trades. These are not all last trade I'm ever going to have to do. When you're trading in the pit, we used to trade on the floor. You are grinding out money where you can find it. And the other one that I'll point out, and this is
Greg, real quick before you move on from this chart, because I want to get a couple questions in that are a little bit more pertaining to this. Like just for instance, in that one move right there off that level, just shortly around 12:30, 12:25, you got like a little spike up above the level. How do you manage that to not avoid getting stopped out on a tick that's just, kind of spiking like that and then continuing down the trend?
Well, I mean, everybody's got to find their own, but for me, I'm sorry, I'll pull this back so we can see it. I'll even dial in a little bit so we can take a look. I mean, for me, look, this is a 1 minute chart. That's a 1 minute bar that went to 82.50 and my trigger level was, 82.35. So that means I probably lost, my options may have been down about 12 or 15 cents, plus or minus. That's well within my risk tolerance.
Right.
Again, okay. if I saw green bar, green bar, green bar, get a little parade going on there. But just like one move in, one move out, I don't necessarily want to bail on the trade because This is the 1 minute. If you looked at it on a different time frame, you probably would get a different scale. But I entered the trade because of this. I'm still down where I want to be, below this. Actually, I think it was this low. It was this low, the 82. No, it was a prior low from today, 82.15. So yeah, that a 1 minute chart, that's not going to, I'm not bailing on it if it goes 10 cents above my trigger.
Right. Yeah, and the other thing I would add to that is you got to be looking at the overall market as well, right? So you're going to be looking at the 80 line, you're going to be looking at the tick, you're going to be looking at the trend, you're going to be looking and watching over your other, what's the spiders doing, what's the Qs doing, what's your IWM doing, and seeing how they are all moving. And if you're not seeing a follow through on everything where everything's all moving up, then you're going to say, you know what, I'm going to give it a minute, right? Don't get so overwhelmed. But okay, oh my God, it's above my level for literally half of that bar, right? So it's like 30 seconds, right? That it's actually above my line. And I'm not going to be stopped out much as that one specific spot for me to get out of that trade. So I think there's obviously a little bit of movement there you have to have as things are ebbing and flowing. And if you're near your trigger level, it's once it gets back down, that's when you really want to say, okay, it's staying down below that level. I had a little bit of a retest, and now I'm even more confident that the market's moving down. Everything's kind of going in the favor, and it's still down below my level. That's when I would actually probably prefer to jump into the trade versus actually the one before, right? So that it did come back up and test. Then, that's the kind of my definition of a trigger, that it actually wants to come back up and retest that level, and then it actually rejects from there, becomes an even better trigger, and have more confidence, especially when it takes out that prior low at like 12 o'clock as Greg has there.
Awesome. And then Greg, just one other thing here, like this trade, for instance, took probably around an hour and a half to play out down to the low. Are you looking for something that's, an in the money put or at the money?
No, well,
out of the
I'll show
money?
you. I'll show you exactly what was
Awesome.
on the, let me show you this. We were looking at, make sure I got, yeah. And you'll note, I did tell everybody, look, the daily ATR have been exceeded. Like this, we put a warning in there saying, like, look, this thing is kind of stretched. ATR is a number, it's not an absolute. But I said, consider the 10 March 282.5 puts. So with the stock at 282.15, the 282.5 puts are slightly in the money, right? So they're 50-ish delta. We're usually trying to go right at the money. In the pit, in general, we are not looking to buy, I'm not going to go looking at the 280 puts if I've got a 282.15 trigger. Yes, they're less expensive, but it's not the style that we look to trade with.
Want more from Market Rebellion? Don't forget to like and subscribe, and learn more about options trading at marketrebellion.com.